What's going on, everybody? I've got Indy's earnings call cut up and edited for you, and I will leave the full call down below. I definitely recommend you listen over the Q&A and a couple other parts that I cut out of it. In the call, they did mention that they're on track for profitability in the back half of this year. And I've got to get going, unfortunately, so I can't give you a full reaction to it. I will be doing that in an upcoming video, but I just wanted to provide you guys with the earnings call. I definitely think this company is one to keep an eye on. I do have shares and warrants on this company. So let's listen to the execs talk about Indy Semiconductor.
I'm pleased to report that Indy delivered yet another above-plan record performance in the first quarter, reflecting robust demand for our highly innovative Autotech solutions. Once again, we substantially outpaced our industry peers, driven by Indy's diverse and differentiated product set, underpinned by over 400 global patents and applications. We're off to a strong start in 2023. Specifically, during the quarter, we grew revenue 84% year over year and 22% sequentially to $40.5 million and achieved a gross margin of just over 52%. Our deep R&D investments and targeted acquisitions are beginning to yield results, allowing Indy to sharply outpace our peer group and insulate us from isolated geographic, customer, and market weakness. We're gaining design win momentum across ADAS, user experience, and electrification applications, setting the stage for sustained outsized growth for years to come as these wins translate into program ramps and ultimately revenue and free cash flow generation. First, within the ADAS product area, we're enabling automotive OEMs and Tier 1 suppliers to meet the growing demand for advanced safety systems in next-generation vehicles. We continue to follow a technology-agnostic approach, supporting multiple sensor modalities such as radar, LiDAR, computer vision, and ultrasonic solutions, from which we will ultimately fuse the data created to provide a comprehensive and accurate perception of the vehicle's surroundings. We believe that a sensor fusion product roadmap, augmented and accelerated by our acquisition strategy, has truly differentiated Indy from the pack, including competitors who tend to cling to one modality, often with an extremely narrow customer base. We believe that no single sensing modality will dominate the application landscape, particularly given the diversity of ADAS use cases ranging from backup safety systems to lane assist to fully autonomous driving and everything in between. And to be clear, Indy's business plan isn't dependent on full autonomy. Our solutions support the evolution of today's safety systems from level 2 to what I like to call level 2+++. In other words, we haven't even begun to address the opportunity presented by levels 4 and 5, the definition of the complete driverless vehicle, but we certainly will when those markets begin to mature. In the meantime, I'm delighted to announce that during the quarter, we captured our first design win at General Motors in partnership with Sharp of Japan. While we can't elaborate upon this particular program, suffice it to say it's a material development for Indy and will initially encompass many of GM's forthcoming models, including its EV portfolio. We look forward to providing additional information upon the global rollouts next year. We also strengthened our position as a technology leader in automotive radar with this acquisition of Silicon Radar. Silicon Radar had developed the industry's first volume production-ready, highly integrated 120 GHz radar front-end transceiver, including on-chip integrated antennas. As vehicle safety standard initiatives such as the European New Car Assessment Program continue to expand globally, there is an increasing need for driver and occupant monitoring systems, making in-cabin sensing solutions as an essential component for ensuring overall safety. In fact, S&P Global Mobility predicts that the market for driver and occupant monitoring semiconductors will grow to over $500 million by 2029 at a 34% compound annual growth rate. On the LiDAR front, during the quarter, we continue to make progress with our Surya SoC program, demonstrating our solution at multiple European automotive Tier 1s. It is the world's first merchant market coherent LiDAR solution that integrates multi-channel high-speed analog to digital converters, hardware and software-based digital signal processing, together with the system control interfaces needed for an efficient and cost-effective FMCW LiDAR system. Specifically, we are targeting a $200 BOM, 80% less than current architectures. As a result, we believe Indy can uniquely drive this key three-dimensional imaging technology, which is now beginning to gain traction as a mainstream sensor. And finally, computer vision systems are a crucial component of both ADAS and autonomous driving, serving as the primary sensing function, with next-generation vehicles requiring up to 20 cameras for sensing functionality. Computer vision systems are diverse, enabling a wide range of applications, including backup cameras, surround view systems, object and lane detection, night vision, and driver and occupant monitoring. These functions collectively enable use cases such as lane change assist, highway pilot, traffic jam pilot, occupant safety, and automated parking, amongst others. During the quarter, we continued to expand our design win pipeline, securing initial vision sockets at Panasonic in support of Honda. Turning to user experience, by background, OEMs have been increasingly prioritizing a best-in-class in-cabin experience as a point of differentiation, prioritizing communication, entertainment, and information sharing. With modern cars becoming more like temporary homes or workplaces, providing the ultimate user experience throughout the entire cabin is becoming the new standard. OEMs have increasingly highlighted the importance of interior lighting, as it can drive an emotional connection with the driver and is a strong generator of brand recognition. Indie is redefining the future of in-cabin lighting with multicolor technologies for an enhanced user experience. The interior and exterior lighting of today's vehicles is rapidly evolving. Indie solutions, such as the recently announced LED matrix controller, are designed to address this growing demand for innovative and power-efficient LED lighting. Based on our power efficiency leadership, during the quarter, we captured additional advanced lighting wins at several leading EV OEMs, both North American and China-based, including BYD, NIO, and Li Auto. Similarly, mobile device integration and wireless charging are also top priorities for global automakers. This technology allows drivers to seamlessly link their mobile device into the vehicle's infotainment system, safely making calls, sending and receiving messages, and enjoying their favorite music without diverting their attention from the road. To date, Apple and Android have provided compelling consumer experiences and have gained significant market share. In that process, Indie has played no small part in enabling this functionality. That said, our chipset is agnostic to whatever software layer is implemented, be it Apple CarPlay, Android Auto, or even in-house solutions. While some OEMs have recently announced plans to transition to internally developed architectures, Indie is in no way impacted by this development, particularly as we continue to sell data transport and power to connect the phone to the infotainment system within any configuration. At the same time, our strong relationships with Tier 1s, global car makers, and rapidly emerging EV OEMs have allowed us to expand our offerings into adjacent areas of user experience, such as wireless charging, USB PD controller, and other in-cabin solutions. And speaking of electric vehicles, we're seeing a market acceleration as EV sales continue to gain momentum. According to Kelley Blue Book, EV sales were up 45% versus the prior year in the US, and the EV share of the total market increased to over 7%. Additionally, as EV technology continues to improve, charging infrastructure expands and battery costs decrease, the potential for growth in the EV market is phenomenal. We expect global EV OEMs will seek more efficient and integrated semiconductor solutions and believe Indie is in a strong position to benefit from the growth, particularly given our strong relationships with an increasing number of leading EV OEMs around the globe. I'll now turn the call over to Raja for a discussion of our Q1 results and Q2 outlook.
Indie delivered a strong first quarter, once again exceeding our top-line guidance and expectations. In fact, this represents our 8th consecutive quarter of beating or at least meeting our revenue and gross margin targets. On a non-GAAP basis, gross profit was $21.1 million, translating into 52.2% gross margin, up 484 basis points year over year, and slightly ahead of our 52% guidance. Total operating expenses for the quarter were $37.9 million, including $29.3 million in R&D and $8.6 million in SG&A, reflecting our continued investment in accelerated product development and expansion of our sales and marketing reach. In turn, our Q1 operating loss was $16.8 million. Below the line, net interest income was $500,000. As a result, our net loss was $16.3 million, and we posted a 10-cent loss per share on a base of 155.1 million shares, in line with guidance. Turning to the balance sheet, we had significant one-time cash disbursements during the quarter, including $90 million related to the acquisition of Geo Semiconductor, $8.4 million related to the acquisition of Silicon Radar, and a $10 million repayment of the Analog Devices promissory note related to the acquisition of Semail. We also invested $16.7 million in working capital, primarily to secure inventory in support of our back half growth plans, $3.2 million in capital expenditures for expanded internal testing capabilities, and $3.9 million in other financing activities. Also, during the quarter, we raised $34.2 million from the ATM and issued 3.3 million shares. These sources and uses of cash, combined with our non-GAAP operating loss of $16.8 million, resulted in $207.4 million of cash on hand exiting the quarter. Looking forward, based on our order visibility and the depth of indie's new product pipeline, we plan to demonstrably outperform the auto tech market over the forecast horizon. For the second quarter, we plan to scale to a $205 to $210 million annualized revenue run rate. Assuming the midpoint of this range at $51.9 million, we expect non-GAAP gross margin again in the 52% range, particularly as we work through lower margin pre-synergized geo inventory. We are also planning $33 million in R&D and $9 million in SG&A, which includes the full quarterly impacts of both our recent acquisitions versus just 1 month in Q1. As a result, we plan to narrow our operating loss to approximately $15 million. Below the line, we anticipate $200,000 of net interest expense and no taxes. Assuming 164.3 million shares outstanding, we expect a 9-cent loss per share. Finally, and to reiterate, we believe the combination of indie's accelerating growth trajectory, gross margin expansion, post-acquisition synergies, and planned operating expense leverage will enable us to reach profitability in the back half of this year. With that, I'll turn the call back to Donald for his closing comments.
Thanks, Raja. In summary, Q1 was another solid quarter operationally, but we also remain in the early innings of what's possible at indie, given the strength of our customer engagements, supplier partnerships, product portfolio, roadmaps, and our world-class design team. In the short term, our performance and outlook represent yet more proof points that we're effectively executing to our plan. In fact, we are now on pace to more than double our top line again this year, our third year in a row of doing so, representing another step towards realizing our vision of capitalizing on the $42 billion automotive semiconductor market opportunity, and in the process, creating an auto tech powerhouse.
Alright guys, let me know what you think down below. I continue to believe that this company is going to be very successful, and I'm sorry I can't give a full reaction, but I will be looking over this again in a future video and also checking out the chart. But thanks as always for watching guys, and I'll see you soon.